Welcome back to our video series. As usual, this is Tyler Johnson. I'm the owner and lead financial advisor with Stillwater Financial Advisors here in Charlotte, North Carolina. We are going to continue our video series on different types of insurance coverage, with today's focus being on disability insurance. For many people, you will probably have disability coverage embedded into your employer plan benefits. However, even if that's the case, it's a good idea to review your coverage and understand the implications of that coverage. If you are a self employed individual or you're with a small company, you may not have disability insurance coverage, and understanding what you do or don't have is really important should something happen that disrupts your income producing ability. Disability coverage is exactly like it sounds. If something happens in your life that prevents you from working and producing income, that is considered a disability. However, there are wide definitions of what it means to be disabled. Some sources define it as the inability to work at your current level of skill and expertise, while others define it as the inability to perform any gainful employment. Think of a surgeon. If they begin having hand tremors, that does not keep them from all types of future employment, but that does keep them from being a successful surgeon. If they don't have the ability to perform at their trained level of skill, that could mean a large reduction in their income earning potential. So the definition of disability with any of your coverage matters. It's also important to understand the amount of coverage. There can be a wide range, usually from 50% of your income to 75% of your income, that is replaced by a policy. But the most common that I've personally seen is usually for about 2/3 of your income. That means if you qualify to be disabled on your particular policy, you're only going to collect a percentage of your income when you were not disabled. That is important to make sure that your total disability coverage will allow you to continue covering your family's financial needs. Taxation of your benefits is also important. If disability is pre-tax when you pay into it, you get a deduction on the front end for taxes, but when you start to receive payments, they're taxable to you as income, which further reduces the amount that you are able to use and live off of. And that's really the last thing you want when you've had a disability, is to have to think about a tax hit on top of that. So it's a good idea to understand your policy's definition of being disabled, the taxation of your benefits, and the percentage of income you can expect to receive should you become disabled. Social Security does offer disability payments, but their definition of a disability is pretty restrictive, and it can be hard to qualify. Determining the right policy and coverage for you should be done alongside a trained professional. If you have further questions about how this information applies in your life, I would be happy to speak with you and leverage the help of insurance professionals as needed. You can engage with me further at stillwaterfa.com. You can also call me directly at 704-248-5553. Make sure you tune in next week, because we're going to be focusing on property and casualty insurance. And don't forget to subscribe below to make sure you stay informed about any new content. We'll see you next time.